Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is October 9th, 2018, and today is Tuesday morning. So again, no economic events for today, but as tomorrow cooks on, we'll see some economic numbers coming out. But just a few points before we do our analysis on the charts. Number one, yesterday we saw a very light trading volume day. Okay, relatively for a Monday, it was very light, besides for the Dow Jones making a V formation, which was really nice, a nice reversal. We opened up down. We continued to sell almost 200 points, capitulated at one point, and then rallied and closed the day on the positive. Okay, so that we may extend those positive day to today and tomorrow, so we'll take a look at that as well. Aussie dollar looking like it's starting to climb again, but will it revive the euro? Okay, the euro has really been in a tight range. We'll take a look at that. JSC consolidating, but again, will it bounce? And it may look like it will, and we'll take a look at that, and we'll see why I say that. And then Tesla as well, weaker on the bottom of its range, really looking like it's going to break down. Apple consolidating at 223, looking like it's getting stronger, so we'll take a look at that as well. But let's see what's been happening in the market. So we're taking a look here with the Euro USD on a daily chart, and as you can see, kind of capitulated here at 14,732. And if we look at a 1 hour chart, you could see that double bottom I was talking about right there. It's nicer actually in a 4 hour chart. Let's just bring that up. There we go. And as you can see, really, making its way on the downside, but holding this 1473-ish level. Now it bounced up to 1493, which is a 20 pip move. Okay, nothing really to write home about. When we look at the GBP and we look at the Aussie dollar, we'll see a sharper bounce. So this is some relative weakness here in the Euro USD. Okay, the next time this may sell off and we do break this 1473, then we may go back to the 13 level. Okay, so that may actually fruit and we may continue selling off on the downside. So we'll take a look at that as that continues to trade throughout the week. Now looking at the GBP, speaking of the GBP, let's take a look at that. We saw a nice bounce yesterday from 1350 to 13.1-ish level. Okay, we're selling off a little bit right now, but that's something to write home about. Okay, after consolidating, after looking like it's getting stronger, especially hitting this 132 level, which we haven't seen in quite a while, it's responding on the upside. Now if we jump to the Aussie dollar, okay, first let's just take on a longer time frame. We're looking here at a weekly chart just to appreciate how far we've sold off from our highs of 81.20 down to 70.84. Okay, more than 1,000 pip move over the past 9 months, 10 months. Okay, so this is really a big correction for the Aussie dollar over time. However, it does look like it's consolidating here at this bottom range. Now, if we take a look at that in just a second, let's just highlight that fact that we have been consolidating at these levels right here. Let's take a look at that just about right here at this level of 74. And we've hit that area once before right up there. But if we do break it, then our next stop is 68-ish level. So just be aware of that, that there's still downside to this, and potentially we could go even further down. Now jumping into the commodities, now I haven't really discussed gold for a while just because it's been kind of quiet. Okay, it's been trading between 1206-ish level and 1190. But you do want to keep this on your radar, because if we do break this area down here, okay, we can see it further correct itself down to the 1150-ish level. Okay, now if you see up here, every time we hit this 1212-ish level, 1206-ish level, we've sold off. Okay, so it's been in a tight range, but it has been trading. If you want to buy the bottom, sell the top, that is an opportunity for you to trade it that way. So just be aware of that. Now jumping into oil, nothing really to write home about yesterday, but looking at a weekly chart, we kind of see that we're going to see a lot of plug and chug here, a lot of pull between the bears and the bulls, kind of fighting things out here. Every time it looks like it's going to take out higher, it sells off. Every time it looks like it's going to sell off, it takes out higher. So it's a little bit of a plug and chug here, but as long as we don't break above the 75 level and hold it, I think we're going to be in a correctional area between 72 and 75. So with that said, however, okay, if we do break the $75 a barrel range, okay, or that resistance, we may see it continue going up to $80. Now there's a target of $100 per barrel. Okay, I'm not sure if we're going to see that so quickly, but as you can see, we've had this nice rally up from $42 up all the way to 67 and then challenging the 64-ish level. But I think at these levels, it's going to be a little bit harder to break it out on the upside. Now, jumping into the Dow Jones. Now, this is what I was talking about yesterday. Let's just appreciate it on a shorter time frame. I think on a 1 hour, it'll look much easier. No, on a 4 hour. Where was it? There we go. Okay, on a 15-minute chart, you could see it a little bit better. This is exactly what I was talking about yesterday, where we sold off and we had a down open, okay, and then made a V formation, okay. This is really the area I'm talking about, okay. We sold off quite sharply. That's over a 200-point move, and then a nice retracement on the upside. Now, these type of days is usually carried by one or two stocks. And, in this case, I would say it's mostly the banks have been very strong, maintaining the Dow Jones, the JP Morgans, the Citibanks, the Wells Fargo, all the major institutions, bank institutions in the United States have been very strong. So that may have caused this rally yesterday that we had. And now we're settled at 26,500-ish level. Okay, now we're still off of our all-time highs by about 400 points. Okay, now if we look at a daily chart, you can appreciate that a little bit better, where we look like we're faltering above this 26,800-ish level. So it looks like a double top. However, okay, the markets are still strong in the United States, so I wouldn't write this off just yet that this is a sell-off. Okay, so we may be consolidating between 26,600-ish level and 26,800-ish level, but we're definitely at the bottom of the range here, so keep that in mind. JSC, as we spoke about earlier, this is really a very important point for the JSC. Now, we spoke about this, that it's at the bottom of its range here. Okay, as we consolidated at 48,500-ish level, it was a previous resistance on several times. Okay, so that's really an important element where we are right now. Now, why am I highlighting this? Now, if we look at a 4-hour chart, okay, you'll see it a little bit better that we're making this double bottom here at 48,000. Now, what's discouraging about it is that it's a candle bar as opposed to a wick. However, on a daily chart, it looks like it's holding its own here at 48,000. So, and we're, below the 30 level on the RSI. So, perhaps we'll get that reversal on the upside. Now, I don't think we'll go back to the 52, 53,000 area, but we may see a correction on the upside. So keep that in mind as today unfolds. That's a very important event as this continues to trade throughout the day. Now, jumping into Apple, as we spoke about, you can see that it's still very strong. The market sold off, but Apple didn't. Okay, Apple sold off quite mildly and just off of its highs by 67 points altogether. As it's trading throughout the day. Now, if we jump into Tesla, however, you'll see that we're at $250 with a candle. Okay, looking to break down further. Okay, so now if this does break 250 and we get to 246. We could see it correct itself further on the downside. Look at that volatility. I mentioned this yesterday. So this is something of really importance right here at $250 a share. If it does break this, previous resistance, subsequent support, so that could be a really great opportunity for today. Now, I'm going to just backtrack into NASDAQ just briefly, and we see that V formation again in a 1-hour chart, and it happened in the NASDAQ as well. But the bounce was not as sharp as it was in the Dow. The Dow components are much stronger than the NASDAQ. So, you're looking for the big board to stay positive and to continue that rally on the upside. Now, I haven't covered, any of the cryptocurrencies because they've been really flat lately. And so, kind of focusing on some of the things that, can create better trades for you. This is Fred Razak. I want to wish you guys a great trading day. Thank you.